Last week, we put out a note where we actually downgraded our returns expectations for Asia stocks. So we're now looking for very modest 6% returns by end of this year, around 16%, which I would call punchy returns by end of next year. And the theme here for Asia is that generally you would see central banks in Asia, embarking on rate hikes sometime, starting end of this year and potentially next year. That means that, the multiple expansion story for Asia stocks is largely behind us. So from here, if we need to see stocks move higher, it will largely come from earnings growth rates. So in terms of expectations, our expectation is we'll probably see multiples, equity valuation multiples, probably stay in line wherever we are right now. So Asia is trading around 14 times, but what will move stocks higher is essentially earnings growth rate. So we are building at around 10% earnings growth rate for next year and another 10% for 2023. And that's how we derive our index returns estimates.
Chetan, what would you be doing with commodity-related plays at the moment? We've been talking a lot about this, particularly in the context of the news of the day regarding power crunches in various parts of the world. Is it too late to ride the commodity wave?
It's it's a very tricky question. The momentum definitely seems to be favoring commodities in the very short term. If you'd asked me this question a couple of months ago, I would have probably said that maybe commodities have already rallied a lot, but clearly that's not the case. So I think in the short term, commodities can move higher. I think if you want to play that theme in Asia, one market we have been recently pushing is Indonesia. Which is essentially it's one country which is benefiting a lot from terms of trade. There's already been reopening happening, as I think your colleague just mentioned, before this chat, that Bali is expected to open. So Indonesia stocks, in our mind in Asia, are looking quite attractive. But short term, I think commodities can definitely rally. But medium term, I'm not too sure.
Right. In fact, you like the inexpensive ASEAN region as a value play. You said you're pushing the Indonesia market. Why are you pushing it? Are investors not keen?
Well, when I say pushing, I mean, it's in the short term, this is one of the markets which we think has the potential to outperform. ASEAN specifically, and if in ASEAN, Indonesia would be one market. The thing with Asia stocks is that if I look at it around the region, India stocks are expensive. Korea, Taiwan stocks have some other near-term challenges. Essentially, the challenge of stemming from higher interest rates in US and therefore, being tech-heavy markets, they might actually be weighed down. So what really leaves for us to play in the short term tactically Southeast Asia, where, as I said, a couple of things are working for these countries. One is obviously terms of trade, specifically Indonesia, and second is the reopening momentum. As these countries look to reopen themselves, not only for domestic business, but also potentially for international tourism.